My channel is dedicated to teaching my investment strategy and finding undervalued stocks in any market condition. I believe there is always value somewhere, which is why I remain almost fully invested no matter what the market is doing. So in today's video, I'm going to share a new stock that looks like it could be undervalued. I will also be sharing my research, reasoning, key highlights, and some of the risks that I have identified with this business. So with that being said, let's just hop right into the video. Alright, so the stock that we are going to be discussing in this video is Rexford Industrial Realty, or Rexer is the ticker. So let's start off by discussing what this business does. Well, Rexer is an industrial real estate company that is primarily located in California. So all of their industrial real estate is in the California industrial real estate market. Now, why I think that this stock is looking interesting today is because it is selling for about $43.70. And if we zoom into the chart right here, we can see that back here in about 2019, September of 2019, the stock was trading for about the same price. So what this means is that over the past 5 years, Rexer's stock has not seen any share price appreciation now. However, over this time, the fundamentals of this business have been continuing to grow and improving. And on my channel, I always love finding businesses where the underlying fundamentals are growing, but the share price is not growing with the business. And that overall leads to a potential undervalued stock in the market. The stock is also down roughly 46% from its all-time highs, so it is in quite the correction right now as well. And in my opinion, the stock is down for two reasons. The first is that interest rates are higher, which is weighing down on real estate values and overall real estate growth. And the second reason is that California is currently seeing an exodus of businesses leaving the state. So there is a lot of businesses that are actually moving out of California and moving their operations elsewhere to save on taxes and etc. And since these businesses are leaving California, it can create a headwind on the overall industrial real estate market in California as well. But I went through Rexer's investor presentation, and there is some key things that I want to point out here. So let's just dive into the investor presentation now. So right away, we can see here that Rexer says the Southern California infill market is said to consistently have the highest demand and lowest supply of major industrial real estate in the United States, which leads to attractive economics and growth for Rexer. Over the past 5 years, Rexer has been able to grow its FFO per share by 15% annually, compared to the industry average of 11%. It's also compounded its net operating income by 31% annually versus 16% in the industry, and it's grown its dividend by 18% annually over the past 5 years. The vacancy rates in the Southern California infill market are also consistently below the nation's overall averages, currently sitting at only 3.2% vacancy versus 5.8% across the United States. Moving on to the final slide of the investor presentation, this one says that Rexer's portfolio is also diverse, with 23% leased to wholesale trade, such as automotive and EV supplies, 23% leased to manufacturing, 9% to professional services, 6% to retail, and 21% to arts and recreation. This diversification gives Rexer stability in its cash flows and allows the company to continue growing and seeing low vacancy rates. So then I went and took a look at Rexer's Q1 earnings results, and here are some of the highlights from its most recent earnings. Company share of core FFO of $123.5 million, an increase of 20.3% as compared to the prior year quarter. Company share of core FFO per diluted share of 58 cents, an increase of 11.5% as compared to the prior year quarter. Consolidated portfolio net operating income of $163.5 million, an increase of 14.9%. Same property portfolio net operating income increased by 5.5%, and same property portfolio cash net operating income increased by 8.5%. Average same property portfolio occupancy of 96.8%, and comparable rent rates increased by 17.3%. The company also ended the quarter with a low leverage balance sheet measured by a net debt to enterprise value ratio of only 21%. So overall, it does seem like Rexer's FFO, FFO per share, net operating income, and net operating income on a same store basis are all still growing year over year. So when we take a look at the company's actual profitability and its underlying fundamentals, they are continuing to grow and hit all-time highs, which again could lead to the stock looking interesting since the share price has now not grown in over 5 years. Then I went and took a look at Rexer's balance sheet, and what I noticed here is that the company does have $12.4 billion of assets and only about $4 billion of liabilities. Now, this is interesting to me because typically real estate companies like Rexer take on a significant amount of debt to continue expanding and growing the business. However, Rexer's balance sheet is actually quite clean, and they have a significant amount of assets relative to liabilities, with a total of $8 billion of book value on the balance sheet. So this was another positive thing for me because again, it suggests that Rexer is not taking on a massive amount of debt to continue growing the overall business. So now let's head back over to Stock Unlock and take a look at Rexer's long-term growth. And here we can see that its revenue has been growing consistently over the past 12 years now, and the revenue is currently sitting at an all-time high and continuing to grow. If we head over to the cash flow statement, we can also see that operating cash flow is sitting at an all-time high of $441.8 million, and it is continuing to grow and grow steadily throughout the years. So this is another very good thing to see. However, if we take a look at the shares outstanding growth, we can see that Rexer does consistently dilute its shareholders. And this is actually common with REITs. So what REITs do is they typically take on a lot of debt and dilute their shareholders to raise more money to continue affording expansions and etc. And Rexer is not an exception here. The company does in fact dilute its shareholders. So in this case, what I prefer to do is actually take a look at the revenue per share growth and the operating cash flow per share growth. And here we can see that the revenue per share is sitting at an all-time high and it does consistently grow. This means that Rexer's revenue on a per share basis is actually growing. And now if we take a look at the operating cash flow per share, we can see that this is growing as well, and it is currently sitting at an all-time high of $2.06 in the trailing 12 months. So the dilution is kind of slowing down the per share growth, but overall the profitability and the fundamentals on a per share basis are continuing to go up. So then the next thing that I did is take a look at the main competitors in the industrial real estate industry. And these are TRNO, PLYM, and FR. Now what I want to do is take a look at the revenue per share and the other fundamental metrics and their growth over the past 5 years. And here we can see that Rexer has been able to grow its revenue per share the fastest at about 12.46% again over the past 5 years. FR has grown its revenue per share by 8.24%, PLYM has had negative 10% per share revenue growth, and TRNO is at about 9.27%. So these two companies right here have also grown their revenue per share quite nicely over the past 5 years, but Rexer has been growing the fastest. Now, if we also take a look at operating cash flow per share growth over the past 5 years, Rexer came in at 13.27%, which is the highest out of the industry as well. So it seems like Rexer is the fastest growing company out of its competitors, and it is the one seeing the most growth. Now, if we also take a look at the dividend per share growth, we can see that Rexer comes in at number 1 at about 20% annual dividend per share growth. So Rexer's dividend per share is also growing the fastest in the industry. So now let's take a look at how these 4 companies are currently being valued in the market. And I want to take a look at their price to operating cash flow metrics right here. So we can see that Rexer's price to operating cash flow is sitting at about 21.5, but that is right near FR, and it is actually below TRNO. The only company that is trading cheaper is PLYM, but we also saw that this company's revenue per share and operating cash flow per share actually declined over the past 5 years. And again, Rexer is trading for about the same price ratio as FR and is below TRNO, despite it growing its fundamentals at faster rates than these other 2 industrial real estate companies. It's also worth noting that Rexer's historical 5-year average price to operating cash flow ratio is about 34.8, so it is trading significantly below its 5-year average price to operating cash flow ratios as well, which could suggest that the stock is looking cheap today relative to how the market has historically valued this business. Now, if we also take a look at these companies' price to EBITDA ratios, we can see that Rexer's is about 17, FR's is about 15.5, and TRNO is sitting at about 25.4. So Rexer is on the lower end in terms of price to EBITDA as well, despite the company once again growing the fastest out of this group of stocks right here. So then I wanted to go and take a look at Rexer's outlook to see, well, okay, is the company not projecting much growth over the next year, or what is going on with this company's future growth, and what is management seeing? So here we can see that as of the first quarter of 2024, the company is expecting about $2.31 to $2.34 in per share FFO. Now, what's also interesting is they actually upped their guidance in the first quarter. So the company is also upping its guidance and seeing more growth than they were initially projecting. Same property portfolio net operating income growth is projected to be about 4.75%. So on a per store basis, they are also expecting the profitability to continue growing over the rest of the year. They're also expecting their portfolio occupancy to remain around 96.5% to 97%. So they're not expecting their occupancy to drop for the remainder of the year either. Now in 2023, we can see that Rexer produced FFO per diluted share of $2.19, which was an increase of 11.7% over 2022. Now again, Rexer is projecting about $2.34 in FFO per share this year, which is growth of about 7% year over year. So Rexer is projecting less growth year over year in 2024 versus 2023, but the company's overall profitability on a per share basis is still projected to grow by about 7% this year. So to wrap up this video, here are some of my closing thoughts on Rexer. This business has historically been the best performer within its own industry. It consistently outperforms its peers and has a track record of very strong growth to both the revenue and the profitability on a per share basis. The company's dividend yield is also right near all-time highs right now of about 3.82%, and the stock is selling right near its all-time low price ratios, which could suggest that this is an interesting point to take a look at the stock and it could be undervalued, again, relative to how the market has historically valued this business. It is projecting continued growth to its per share profits in 2024 as well, despite a tougher environment for overall real estate companies and higher interest rates. As interest rates drop, Rexer should see tailwinds to its business as well, and it should see its growth pick up once again in the future. So overall, Rexer seems like a high quality business that is selling near its historical lows right now, and again, it could be looking like an interesting stock in the market. If it can continue growing over the long term, and if its growth can re-accelerate when interest rates do eventually drop, then this could look like a good entry into a high quality stock, again, when it is selling near its historical low price ratios. So that is my thoughts on Rexer right now, and I'd love to hear what you guys think down in the comment section below. And again, I truly do my best to provide as much value to you, my audience, by finding undervalued stocks in any market condition. And Rexer is a stock that has been on my watch list for over a year now, and it is now at the point where the stock is looking quite interesting, and is definitely one that I would put on your watch list and one to research more. But with that being said, that is going to wrap up the video for today, everyone. And if you enjoyed this video, then please remember to leave a like on it, as it does help out my channel, and I truly do appreciate it. Also, if you're new here and you want to stick around and see more content like this, then please consider subscribing to my channel as well. But with all that being said, that is going to wrap up the video for today, everyone. So thank you so much for watching. Again, I truly do appreciate it, and I really hope to see you all again in my next one.